Alrighty. Good morning. Good morning. What's up, everyone? Good morning. Hope you guys are doing well. Today is Friday, November the 14th. You can see overall markets down a decent amount here in the pre-market. As for yesterday, we actually had our biggest red day in about a month. So really big drop on the overall markets. We kind of talked about this yesterday. So hopefully you guys were prepared coming into market open. We kind of talked about that key level here on the Qs, which was right essentially textbook, right? Textbook break and retest. We had our previous day lows, Tuesday's lows, Monday's lows marked out. If we broke underneath that 618, potential gap fill reversal. So you can see the overall markets, we end up filling this gap towards the downside, and we actually ended up having a lot bigger of a push lower. And of course, now you can see in the pre-market all the way back down and towards our last week's lows. But we'll talk about this here in a second. As for the overall markets, basically all major indices dropping here. Tesla and Nvidia, these were our two main watches for downside yesterday. Tesla underneath really key levels plus relative weakness coming into pre-market yesterday. This one's also down about 4%, so we'll mark out key levels here, but basically 10% drop from yesterday. And then even Nvidia was our key watch underneath our previous day lows for this nice gap fill towards the downside. But yeah, what's up, everyone? Hope you guys are doing well. Let me grab some water here before we get started. Yeah, what's up, everyone? Hope you guys are doing well. Andreas, good morning. Victor, EHT, Felipe, Nontali, good morning. Jeff, Deuce, KO, B Roots, I am. Deuce, what's up, everyone? Martin, 50, Juan, Gerald, Lamit, Ryan. Let's see. This might be a huge time for a huge correction. Well, at least for the overall markets, we're dropping. We kind of talked about the tech rotation earlier this week. I think the key here was the Dow. So something we don't normally look at, but you can see the Dow really strong push towards our all-time highs, huge rejection. So if the Dow's going to reject off your all-time highs, then that means all the other major indices are going to have a pullback here as well. So that's why you can see for the ES never quite hit your all-time highs, and Q never quite hit your all-time highs, but now we're having this major pullback just because the YM is rejecting off this all-time highs pivot point. What's up, everyone? Would have dropped yesterday? Yes. Let's see. Please give warning. Yeah, if just a quick mention, I see a couple people typing in the chat for talking about the Discord group. If you guys are joining strictly just for signals, that's not the reason to join the Discord, right? It's based off education. We have live sessions where we mention what we're looking for here in the pre-market, and of course in the live session, what we're looking for intraday, entries, exits. But if you're strictly looking for signals, right, this is not the room to join. What's up, everyone? Good morning. Good morning. Awesome. Okay. Yeah, let's go on to the higher timeframes on the ES and NQ, and then we'll get started here. Okay, so yeah, coming into today, let's kind of just look at this on the hourly chart. So overall, the higher time frames, the key levels we had marked out, really yesterday was actually this key pivot, this key pivot low. As you can see, we do have multiple touches, which is your 6850. Ultimately, broke underneath our 6850, which was essentially our triple support level here on the Qs. Once we broke underneath this level, we kind of talked about a potential drop down in towards our Monday's lows. So for the ES yesterday, nice break underneath your previous day lows, retest, continuation down in towards your Monday's lows. And now we actually had a much bigger push in the close of yesterday. Plus you can see in the pre-market here, pretty big drop towards the downside. So now you can see the key levels that we have really marked out is going to be our last week's lows. So specifically for the NQ, since this one is a lot weaker, we're going to be looking for the NQ to take out your last week's lows, whereas the ES potentially doesn't have to take out the low just because it's a little bit stronger. But we'll take a look at the NQ chart here in a second. As for the key levels of support, we're currently at it here for the ES, and then we also have this level, which is going to be all the way back down towards your last week's lows from last week, which is your Friday's lows. So coming to market open, we're going to have a pretty big gap. So I think this session is going to be a little bit more tricky just because, right, we're gapping down in towards essentially a key level of support. Yesterday, we gapped down and we're right underneath your previous day lows. This morning, you can see we're about to gap down, essentially, as I mentioned, right into a key level of support. So it's going to be a little bit harder to short coming to market open, really, unless we're underneath your last week's lows. So for the ES coming to market open, as I mentioned, we're going to have a pretty big gap down here on the markets after a really big push lower, another big gap down. I would be cautious coming into market open if you're trying to chase this short lower, right? The short move was, of course, underneath your last week's lows, which in this case for the ES would be your 6,600. So for the ES coming to today, what I have marked out is basically your previous day lows. It's going to be this 6740, and I'm also going to mark out our last week's lows, 6660s. If we go into the SPY chart, the key levels that we have marked out, let's just go on to the hourly. We can also readjust this if you like here as well. But basically for the SPY chart, right, the key levels, as I mentioned, would have been yesterday off of your low that we created here on Wednesday. So this was the key level from yesterday, at least coming to market open today. We have a couple key levels, our last week's lows, 664. We have this general area, 669, and we can mark out our previous day lows, 670. So as I mentioned, coming into today, the overall market, of course, now based off of yesterday's price action, right, pushing towards the downside. Of course, this week we're underneath our Monday's lows, so we're fairly weak for the week. Now we're underneath key levels here as well. For SPY coming into today, with this gap down, as I just mentioned, it's going to be a lot trickier to look for shorts because we're about to short essentially right into a key level support from last week, which will be your 662. The best short would be a potential kind of pop and fade down in towards your low from last week. But ultimately, we're kind of dropping here in the pre-market. So as I mentioned, we're going to need a pop if you want to short this towards the downside. There's a better chance right off the bat. We're just going to kind of drop lower right in towards our last week's lows in this case, which is our 661. So we'll kind of talk about the SPY a little bit more here in a second, but we'll talk about the Qs, which is essentially leading the markets towards the downside. All right, let's mark out the ES chart, sorry, the NQ chart. So the key levels that we have in this case, we can just mark out our last week's lows, which is just going to be this 24,720. So you can see based off the higher time frames, key levels that we have marked out, touch here, touch on Tuesday, touch on Wednesday. We talked about this potential break underneath. We do have this gap fill towards the downside. Markets can reverse, and now we actually stayed heavy, and now we're continuing all the way back down in towards our Friday's lows of last week. So on the lower time frames, you can see nice break, retest, continuation, filled the gap, and now we're also gravitating down in towards our last week's lows. So coming into market open, the key levels that I have marked out are going to be our last week's lows along with our previous day lows. So there's really two scenarios specifically for the NQ coming to market open. Number one, previous day low short for continuation towards the downside. In my opinion, this of course would be the low risk off your previous day lows, but the fact that we already gravitated down in towards our last week's lows, it's going to be a little bit more difficult. Similar thing with the short underneath your previous day lows now is also in play, but with the overall market already having such a big push down, I would be very cautious on this short, right? You can be looking for shorts underneath your last Friday's lows for continuation lower. But as I mentioned, with the market dropping hard yesterday, plus we're already having a gap down, I personally don't like this short as much unless it was on lower size underneath our last Friday's lows. So coming into today, I'll be a little bit more cautious. We could very much well just bounce off our last week's lows and have a little bit of a mean reversion coming into market open. So that's always in play here as well. If we look at the QQQ, basically the similar thesis coming into today. Let me kind of just readjust this. I think you can see this a little bit better here on the Qs illustration wise. But at least for the Qs coming into today, right, as I mentioned, key levels that we have marked out. We have our last week's lows, which is our 600 key psych, plus we have our previous day lows here as well. So for shorts, you can see yesterday it was off of your previous day lows. So very low risk right off your key levels. Coming into today with this big gap down in the markets, a potential pop and fade off your previous day lows is farther away. But this, of course, is going to be your low risk short for continuation lower. So previous day lows 607 here is going to be key on the Qs. Another possible scenario, similar thing to the NQ, break underneath your last week's lows 600 for continuation lower here as well. Sorry, let me just grab some water here. But for the Qs, as I mentioned, potential break underneath your 600 key psych for continuation lower. But as you can see with this big push lower, with this gap down in the markets, this is something we really are not as interested in, just because risk to reward ratio wise, we're at big push lower. Can we see a bigger move if we hold underneath? Yes, but I would just be a little bit more cautious just because it very much well could come down, wick, and have a V-shaped recovery back up and towards your previous day close. So at least coming to market open right off the bat, we're going to wait for the first kind of 30 minutes to develop. I do expect it to be quite volatile. If we do hold underneath and break underneath that last week's lows, then we can be looking for shorts for the rest of the day towards the downside. If you want to have a strong bounce right off the bat, I'm not really as interested in playing the bounce. So I'd much rather wait for kind of that morning volatility to set, right? Either you're looking for that immediate retest right off the bat for continuation, or you're just going to wait for that kind of first 30 minutes to develop, and then either wait for that gap fill frame underneath your Friday's lows of last week. We do have some more room towards the downside. So the good thing about the key levels that we have marked out here is that if we do break, if we do break underneath this key pivot low from last week, potentially we can see a move all the way back down in towards this news candle low, which is fairly far away. So we do have a little bit more room if we do want to break underneath that previous day low level. Okay, let me go on to some tech names here as well. If you guys do have any charts or any tickers you'd like me to go over, I'll go over some Mag 7 names, and then of course I will go over some other charts here in a second. But yeah, if you guys do have any charts or any tickers, you guys can drop them in the chat. What's up, everyone? Good morning. Hope you guys are doing well. And no, it should be fine. Let's see. Yeah, what's up, everyone? Good morning. Hope you guys are doing well. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys are new and haven't joined the free watch list, that of course is in the description below here as well. When will PPI and CPI release reports come out since the government is open? Yeah, so the government ended its shutdown yesterday, but for the overall release, the economic reports, the ones for October most likely will not come out. So we had a bunch of CPI, PPI reports. We had unemployment claims. All those ones never came out, and I don't think they'll be released. So now we'll just have to wait for the next. We'll have to wait for the next Red Folder news event, which is going to be next week at FOMC minutes. Okay, let me go on to my, yeah, it should be good. The stream's good on my end. You just refresh the stream and it should be fine. Okay, so first things first, let's kind of talk about Tesla here. So Tesla was inside of this consolidation period. So Tesla, key levels that we have marked out is really just primarily this consolidation. We had our 470s marked out along with our 420s. And you can see yesterday showed some relative weakness, and now we continue towards the downside. So Tesla was showing relative weakness all day, specifically here in the pre-market yesterday. Before the markets dropped, Tesla was already underneath their previous day lows. So this was a sign for Tesla for continuation towards the downside. And Tesla, you can see, once we broke underneath really key pivot levels, really strong move lower, and we end up gravitating nicely down straight in towards our full gap fill. And you can see for Tesla here now, there's actually a lot more room towards the downside, right? After this consolidation period, where's your next level of support? Technically all the way back down in towards your 360. So with Tesla showing a lot of weakness, gapping down here, really the next level here on Tesla is all the way back down in towards this key high, which is 360 on the higher time frame. So this is what we have for Tesla, at least strictly basing it off of the weekly chart. Potential pullback even further in towards your 370. As for key levels coming into market open, you can see really nice push towards the downside. These are your key levels. Basically now it's just going to be your full gap fill plus your previous day lows. I actually still have some contracts left over from yesterday, so they should be up nicely. But for Tesla, key levels 396, previous day lows. We have a higher time frame objective, which is your 370. This one now, it's not really based off of technicals. With the overall market dropping, there's no real technical levels. You can see if we're looking at this price action, right, it only happened in one day. So we already had such a big push higher. That's why you can see markets are moving fairly quickly towards the downside because there's not a lot of volume. Now the key levels, as I mentioned, previous day lows plus your 370. You can also mark out your pre-market levels here as well. But for Tesla, if you want to see continuation lower, potential right underneath your pre-market lows for a push towards the downside right off the bat. Another possible scenario, either the pop and fade off your 390, or it could very much well come all the way back up and towards your previous day low, reject, and come all the way back towards the downside. So this is what I have for Tesla coming to market open. Really now, it's just going to be based off of intraday price action. So if you're looking at this name, this is a good day to mark out your 5-minute range and use that, at least within the first really 15 to 30 minutes, is use that 5-minute opening range candle, since that is going to be fairly important coming to market open. So you can mark this up. As for some other tickers, at least that's the game plan for Tesla coming into today. As for Nvidia, key levels that we have marked out on this ticker yesterday, nice kind of reject off your previous day lows. Coming into today here, key levels that we're going to have marked out, Friday's lows from last week. So for Nvidia, nice push towards the downside currently here in the pre-market. This is your previous day lows. We also have your last week's lows. If you want to see a short, potential pop and fade off your previous day lows, I don't think the market's going to come back up and towards your previous day lows. Most likely, we're just going to drop right off the bat. So for Nvidia, right, we're most likely just going to drop right off the bat. So this is like not an area you really want to be looking to short, just because we're about to short right back down into a key level of essentially support. You can see all these lower wicks here. If you're shorting down here, it's just going to be primarily a scalp, and you want to be a little bit more cautious. But that's the key levels coming into today here for Nvidia. It's going to be that previous day lows. Look for a potential kind of relief bounce, but as I mentioned, I do expect it to drop right off the bat, or it could even drop before the market opens. But those are the key levels. Keep an eye out on your 179 along with this 177. As for a few other tickers here, a lot more mean reversion. So I'm going to have to redo all these charts as well over the weekend. I'm not sure when I'm going to do the, most likely next week, for the Sunday weekly prep. This is something new. I'm probably going to only do it maybe once, maybe a couple times, maybe once a quarter potentially. But next week, most likely, I'm going to be doing a Sunday scan / marking out my key level / basically how I draw my key levels, how I prepare for the markets coming into the week. So I'll keep you guys updated on that, but I'm most likely will be on Sunday next week. We'll have an updated time for you guys, but probably around 12 or maybe 6 p.m. Eastern Standard Time. But we'll have that next Sunday most likely. As for AMD, right? AMD key levels that we have marked out is just going to be your news candle high plus your news candle low. This one's showing a little bit of weakness here in the pre-market as well. Most likely now we're just going to get that pushed down in towards that news candle low, 236. As for a lot of these tickers, a lot more consolidation. The main tickers that are leading the markets lower, Nvidia and Tesla, Apple consolidation. AMD is still relatively holding up compared to the market, kind of showing a little bit more weakness now. As for Amazon, this one broke underneath key pivot levels, which is your previous all-time highs. Nice continuation lower. So a couple nice mean reversions here. Really, the main short was yesterday. I think today, right, on Fridays, if you're playing zeros, it's just going to be a little bit more difficult. The main short was yesterday off our key levels, which would have been that, right, previous day lows where we had multiple touches. Now with the overall markets, it can do two things. We can either have continuation lower if we hold underneath your 600, or if we just bounce, right, potentially we can see a mean reversion back towards the upside. So be open to playing both sides, at least coming into today. Yesterday, we're leaning more towards the downside just based off of the gap fill that we had, plus, right, the weakness that we're showing on the QQQ. This morning, I'd be a little bit more cautious. As for the rest of the names that we do have here, Google, nice mean reversion back lower, down and towards that earnings low. Microsoft, this one was showing relative weakness really on the higher time frames, but not showing as much anymore. Key levels that you're going to have marked out, previous day lows on this one here as well. And then Meta, this one continue to show relative weakness. So the key levels here on Meta is just going to be your previous day lows, along with the lows that we created from last week. So we can draw this out, 602, touch here, another touch here for Meta coming to market open, potential previous level of support now turn into resistance. So we'll keep an eye out on Meta. If you do want to see some more downside, this one has been continuing to show weakness. We have a little bit more room lower, right? Of course, we have this huge gap. I don't think we're going to come fill it, but key levels, you can just mark out 590. You have your 586 and below here as well. So these are the levels we have marked out coming into today. Just keep an eye. The main thing here is just your SPY and Qs, your last Friday's lows. As I mentioned, right off the bat, there's going to be a lot of volatility. So there's not going to be a clear direction within the first, in my opinion, first 30 minutes, right? If you get that fade right off the bat, or if we drop right off the bat, don't look to chase the short within the first really 10 to 15 minutes, because the market probably, there's a good chance that we do drop because the SPY still has a little bit more room lower, but you don't want to be chasing shorts down here, right? The shorts, as I mentioned, was yesterday. That was off the low risk, off of your previous day lows. Now we're at a key level support, right? We already had a huge major drop. We had the biggest red day yesterday, plus we're having another gap down. So we basically had a 3% move on the overall markets in a straight line. So if you chase shorts down here, can it go lower? Yes, but you just want to be a little bit more cautious and just keep in mind that the market is down 3% in the past day and a half, or past one session. But at least coming to market open, main watch is coming into today. I'm just going to be looking for continuation here on Tesla, as I mentioned, just based off intraday price action here now as well. I still have a few contracts left over from yesterday. Other setups that I do like, I actually do like Meta. So Meta, higher time frame, potential break and retest off of your 602. You can see Meta is a lot more weaker compared to the rest of the names, right? It's actually underneath your last week's lows, whereas most tickers, specifically for the Qs, are still above it. So you can be looking for the Meta retest underneath your 602.50. As for everything else, just really primarily pay attention to these SPY and Qs themselves. And that's really what the main thing is here. If SPY bounces and Qs bounces off your last week's lows, we're going to get a little bit of a mean reversion. If we stay heavy, then I expect the rest of the tech names to head lower here as well. Okay, if you guys do have any charts or any tickers, I'll probably go over them for 5 to 10 minutes. Don't have too much water here. My throat's kind of sore this morning, but if you guys do have any charts or any tickers, you guys can drop them in the chat. As for, yeah, if you guys do have any charts or any tickers, I'll go over them for the next 5 to 10 minutes. You guys can drop them in the chat if you guys are enjoying this so far. Appreciate if you guys drop a like. If you guys haven't joined the watch list, the daily watch list that I post every single day, you guys can do so in the link in the description. As for some other housekeeping items as well, YouTube video this Sunday. It's actually going to be my favorite YouTube video I posted in a while. I'm showing you guys basically every single trade that I took. It's like a live trading video / strategy video that I basically every single trade that I took for the week, showing you guys the sizing, thought process, right, the executions. So that's going to come out on Sunday at 12 p.m. Eastern Standard Time. That's, as I mentioned, one of my favorite videos that I've made in a while. But yeah, for Palantir, this one's showing weakness here as well, right? AI theme actually broke underneath a very key level support here in the pre-market, right? You can see touch, 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 breaking underneath potential more continuation towards the downside. So key levels that we have really now 160, which you can see markets are really already gravitating towards, and below, which is going to be your 156. The great thing about when you're trading towards the downside is that it moves a lot quicker. So a lot of times when you're trading towards the upside, it's like stair step up and then short side, usually elevator down. But for Palantir, previous day lows, fairly far away. Of course, as I mentioned, low risk, but this is very far away. Now for Palantir, most likely it's just going to pop, fade down in towards our key levels, which is our 161. So Palantir, really not too much to talk about just based off of this daily chart. I think we can see a little bit of a bigger pullback now that we broke underneath this key level support. If we have a strong daily candle close underneath, then potentially your next key level support all the way back down and towards your 150. So that's going to be the key levels here on Palantir. Other key levels that we have marked out 163. So basically a lot of these names are pulling back here now. So you can see names like Hood, SoFi ultimately rejected off our all-time highs. It's because the overall market's dropping, plus we have a little bit of a tech rotation. So you can see now a lot of these growth names are having a bit of a pullback, right? Oracle's been having a pullback after having this nice gap up and towards our all-time highs. A couple semis still relatively holding up, but something like Hood now showing a little bit more weakness, right? They consolidated for a while. Now we're going to show a little bit more weakness just because the Qs is in a very key spot. But the fact that we have the Qs, it's not even down that much, and a couple of these names are pulling back a little bit more. That's a good sign, as I mentioned earlier in this week, is that we essentially have what's called a tech rotation. So money is rotating out of tech. The YM hit your all-time highs. Qs failed to hit your all-time highs. So this is a signal of relative weakness, right? You can see right here. One went up to gravitate towards your all-time highs. The other one failed to do so. So that's why you can see the Qs is having a little bit more relative weakness here. And this is your main candle. Still, right, this is your key level. Sorry, this is your key level. But for the NQ moving forward, really the next major level of support that I do have, if you can't hold your last week's lows, is going to be this 24,200 here. I don't think it's going to gravitate there towards today, but of course that's not out of the picture. 24,200, but that's what we're going to keep an eye out on coming into market open. Let's go into a few more tickers here. IWM. Let me go into some of the major indices here. Yeah, IWM, similar thing. Right, nice push towards our all-time highs. Consolidation in this general area. Now, if we break underneath it, I would like to see the buyer step in. Like today is basically a very key day for the buyers to step in because we're back into a key level support. So far for the IWM in the pre-market, breaking underneath your previous day lows, you can see push down in towards your key level support all the way back from October the 10th. If we can bounce here, potentially we can see a little bit of a mean reversion. If we show some more weakness, we're going to see a continuation lower. Okay, Let me go on to let me scan through a couple more tickers here and then I'll get ready for market open. But yeah, Oracle continue to show weakness. A lot of names. So the overall market's just red, right? You can see if you go into most tickers here, almost majority of tickers are red, specifically yesterday, right? Major pullback on most of these names, which is expected with the Qs push towards the downside here as well. So the main thing is to focus on the QQQ themselves. So coming to market open, I'm going to go over my game plan. I'm going to call it a day here, but coming to market open here, your last week's lows is going to be key. As I mentioned, if we want to be very aggressive, which, right, you can be aggressive right off the bat if you want to, but I would just be a little bit more cautious. As I mentioned, right, down 3% in the markets, gapping down here in the pre-market, right? Could you be looking for that previous low from last week to be used as resistance right off the bat? Yes, I would just be a little bit more cautious. I'd size down because it is going to be fairly volatile. But this is a possible scenario that you could be looking for within the first really 5 to 10 minutes of market open. Besides that, if you're going to be patient, then I would just wait for the first kind of 30 minutes to an hour, right? So there's really only two options here. You're either really aggressive within the first few minutes or you're just going to be hands off. As for the Qs, right, either the break underneath or if it kind of sweeps this level, potential kind of mean reversion, as I mentioned. For the SPY, the next key level, let me just readjust this. SPY next key level is going to be your 662. So for the SPY, there's a likelihood that we're going to gravitate lower, down and towards your last week's lows. So that's why Qs most likely will drop right off the bat. As for my main watches coming to today, as I mentioned, basically everything looks fairly similar. If the market drops, the names are going to drop. If the market bounces, some of these are going to have mean reversions. Tesla showing a lot of relative weakness, down 4% here. Key levels that I just have marked out now, pre-market lows, previous day highs. You can also mark out potential other pre-market levels here as well. For Nvidia, previous day lows, and then you have your higher time frame key level 179, your last week's lows from Friday. As for AMD, Tuesday's lows are earlier this week. Apple, be a little bit more cautious on. There's nothing happening on Apple. Amazon down in towards your 232. Potential full gap fill reversal here. So for Amazon, we had earnings, nice push higher. Now the key level here for Amazon is going to be this 232. If we can bounce here, potential mean reversion. If we break underneath, we're going to see this push towards the downside. So we have for Amazon, keep an eye out on your 232 coming to market open. Google, nice push lower. A couple of these names pushing lower here as well towards the downside. My favorite actually is Meta. Potentially, if you can get that immediate retest off of your previous day lows. I like this one for continuation down in towards your 590 here and below. So Meta, in my opinion, is actually the best looking higher time, the best looking higher time frame chart. Besides that, as I mentioned, just pay attention to the SPY and Qs, really just based off of intraday price action today. So I'll be a little bit more cautious. I know a lot of people are coming to market open, right? After seeing a day like yesterday, they're going to be really aggressive. They're going to be looking for any opportunity possible, right? But this is when you want to be a little bit more cautious. As I mentioned, you either can be super aggressive within the first 5 minutes, which I probably would not recommend. And I'll probably just wait for that first kind of 30 minutes to an hour to develop and just let, right, the market, essentially let the market digest after this big gap down to market open. So at least coming to market open today, I'm going to be a little bit more patient, most likely with the SPY and Qs already gapping down. Still have a few Tesla trailers, so I'm probably just going to realize that and call it a day. If there is any opportunity, I do suspect it most likely just to be on the SPY and Qs, the reaction that we have off last week's lows. Besides that, yeah, I would just mention, just be a little bit more cautious. Usually this is what happens as well, is that I can tell the sentiment based off of like how many people join the pre-market preps. But yeah, coming to market open today, just be a little bit more cautious with the overall market gapping down if you're going to short, at least right off the bat. But yeah, that's going to be it for me today. My voice is a little bit dry. I didn't have too much water this morning, but I'm going to call it a day here. If you guys did enjoy that, appreciate if you guys drop a like and sub. Of course, if you guys haven't joined the watch list, that one's in the description below. I have a YouTube video coming out Sunday, which is going to be really good. And then, yeah, that's about it. Hope you guys have a safe day today, right? Stay safe out there. No reason to oversize on a Friday here as well. But yeah, that's going to be it for me today. And I hope you guys have a great rest of the weekend. All right. Take care, everyone. Peace.